Well, welcome to Monday, August 5th, a day that might might go down as what some people are referring to as Black Monday. Anyway, let's see what we got going on here. We've got a little bit of a crisis in markets, and unfortunately, a crisis in markets is really bad for, frankly, the economy, because as markets collapse, companies try to save money so that their stocks can recover, and in that process, they lay people off. It's extremely common. A lot of folks now waiting for maybe an emergency cut from the Federal Reserve, waiting for Powie Wowie to come swoop in and save the day. I don't know about that. This is going to be quite interesting. Let's put it this way. In my opinion, the Federal Reserve fears inflation substantially more. That doesn't mean they can't come out, swing in with a little 25 bippy doodla here just to try to calm things down. That's not going to cause inflation, 25 bips here or there. But you're gonna get a big old deep old swingo out there? Probably not. Probably not. Again, they fear inflation much more than they fear recession. Recessions are healthy, unfortunately. They will lead to substantial layoffs, and it is not good. You do not want that. You don't want to be in a recession, because unfortunately, it is very painful. Now, a lot of people, I see the comments all the time, they're like, oh no, I want things to be cheaper, I want a recession. I'm like, you idiot, you don't even know what you don't even know how bad a recession is. It's just going to be so nasty because you won't have any money. And then when you don't have any money, you lose your job. And then you'll be like, oh, things are cheaper. And it's like, oh, yeah, you can't buy anything anyway. But what are you going to do? All you can do right now is take a look at the futures. And I mean, it's been a very, 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 very long time since I've seen the NASDAQ 100 down over 6% and falling into the open. Look at that. NASDAQ 100 down 6%. Tesla down 10.4%. Nvidia down 14%. Bitcoin 49.9%. Holy crap. You've got Russell Small Cap here down 5.5. Where's Tom Lee? You've got Amazon down 8% again. Bro, it was just down 8%. Now it's down another 8%. Yeah, that's going to be something else. So, let's take a look at the VIX volatility index right now. Oh, is Goolsby now? Where's Ghouls? Is Goolsby? It's funny. Somebody was asking yesterday, on Friday. They're like, "Hey, man, the VIX is really high. Should I short the VIX? Because it'll probably go down. It always goes down." And I said the one problem with shorting the VIX on Friday. I told them this. I go, the one problem with shorting the VIX is you don't know how high it's going to go. It's skyrocketing right now.
Look like overheating. So I think the Fed is forward-looking. The Federal Reserve Act gives us a straightforward job to stabilize prices and maximize employment, and that's what we're going to do. And so as you see jobs numbers come in weaker than expected, but not looking yet like recession, I do think you want to be forward-looking of where the economy is headed for making the decisions, and remember that, say, the payroll jobs number is plus or minus 100,000 a month, so be a little careful over concluding about things in the margin of error.
Would you step back, Austin, and maybe sort of put it in context? jobs number was probably the worst number we've had. But we've also had a bad ISM manufacturing index. Are there other indicators out there that suggest to you that we've missed the idea that this economy is in recession or about to go into one?
Yeah, the manufacturing's a little complicated for the reason that we went through a pandemic with a downturn where spending on physical goods went up, very unusually compared to previous business cycles. So you knew that as people shift back what they're spending towards services and away from manufacturing, that there would be some weakness in manufacturing, even separate from the business cycle. So we gotta calibrate that one, and it's not as easy. Now, that said, there are other cautionary indicators that I've been citing for a long time, like the rise in consumer delinquencies, the rise in small business defaults. Those things have been trending the other way, and now they're to levels that they have not settled at levels that you think of as being during boom times. On the other side, if you look at domestic purchases, the GDP number was relatively stronger than we expected.
Right.
The previous one was a little weaker than expected, but in total, the economic growth continues still at a fairly steady level.
Also, I want to ask this outright. The market is priced for 150 basis points or more of cuts by through January, for a 50 in September. Is the market over its skis here? Do you think it's embraced a panic about the economy that you don't have?
Well, look, you know I never like binding ourselves ahead of time before meetings, even a single meeting, much less 5, 6 meetings from now, because we're going to get a lot of information. It seems like there's a lot going on in the world as well. You got the Bank of Japan raising rates when everybody else is cutting rates or thinking of cutting rates. And so you got movements in the exchange rate. And so the international component of this is probably a little more complicated. I think the market's reaction, if you just plot out what their projected Fed funds rate will be and plot it against what the actual Fed funds rate does, you can see that it's the market's job to react and it's the Fed's job to act. And one of those moves with a lot more volatility than the other.
I understand, I think, what you're saying there. Is there a chance, Austin, you think, of an emergency cut between now and September?
Look, like I say, I'm forbidden to talk about what people's opinions are or speak for the committee. You've seen the table. It's a huge table. So everything is always on the table, whether that's increases, cuts, et cetera. But the Fed's job is very straightforward. Maximize employment, stabilize prices, and maintain financial stability. That's what we're going to do. We're forward-looking about it. And so if the conditions collectively start coming in that on the through line, there's deterioration on any of those parts, we're going to fix it. That's the Chicago motto. There's no bad weather. There's only bad clothing. The conditions come in, we're going to respond.
Austin,
as
I think the question is the balance between the two of these of this dual mandate. For a long time, you didn't really have to think about the jobs piece at all. And at what point? What is the inflection point at which you say to yourself, "Okay, now we got to actually forget about the inflation piece. Let's focus almost solely on this other piece." Or do you think it's not that way?
Well, barring a major change, it's not that way that you would ignore the price stability piece. But I'm mentally have been saying for some time, we're in a balanced risk posture, which is to say we could go for a long time just focused on inflation because inflation was the place where we were falling down and the job market remained extremely strong. Now, you see some weakness in the job market, we have to pay attention to that. And as I say, my view is we're as restrictive in real terms as we've been, higher than this entire cycle and highest in many decades. And you only want to be that restrictive for as long as you have to. If you don't think there's a chance of overheating or it doesn't look like overheating, it's not the right time to be tightening.
Austin, I'll confirm you have been saying that and saying that pretty regularly. I just want to put some I don't know, meat on the bones of that comment. Do you think the Fed should not be restrictive right now?
Do I not? Say
Do you
it,
think
say
the
it
Fed
with
should
fewer
not be
negatives.
restrictive?
Should we reduce the restrictiveness?
Should the Fed not be at all restrictive right now?
We should not be. I'm not going to bind our hands of what should happen going forward because we're still going to get more information. But if we are not overheating, we should not be tightening our restrictiveness in real terms. So if inflation is falling, then us staying at the same rate is tightening. So that's my view of how the action should go.
So you don't think the Fed should be restrictive at all right now, or a little bit restrictive? Where do you think we ought to be right now?
That sounds like a semantic point a little bit. I think we should respond to conditions on the broad through line. As I look at the broad through line, inflation is way down and is trending the right way. Employment is still at a relatively decent spot. Even in the last employment report, you saw the employment to population ratio rising. You saw labor force participation rising. So we still have some strength, but it's going the wrong way. And it needs to settle in to normal and full employment. If we blow through normal, then we're in a different situation, and we would, in my opinion, we would need to react more robustly.
Let me ask it from the other side. Do you think there's a possibility the market here is overdoing the take from the jobs market? There were those who said the unemployment rate rose because people came into the workforce. I guess one of your colleagues, Tom Barkin, suggested 114,000. That's what we do in normal times.
Yeah, look, as I said, the jobs number of 114,000 was below the expected, but it's plus or minus 100,000 a month. So
Right.
it is definitely worth remembering. The Fed's job is not to react backward looking to 1 month's numbers. And if you look at how the market reacts in its predictions of the Fed funds rate, there's a massively more volatility in the market reaction on a day-to-day basis than in what the actual moves are.
Austin, is it possible that it isn't a slow decline in hiring, that it actually becomes something worse? I'm thinking technology. I'm thinking wealth effect for what we're seeing in the markets. If this were to get, I'm not saying it's going to, but let's say we've had such a run in the NASDAQ and everything else. If it did slow down, could some of the main drivers of all the employment gains we've seen, couldn't that dry up really quickly? And is that in the calculus for the Fed and how it thinks about?
Certainly, it's got to be on the consideration set. I think you're describing kind of a dynamic that in normal business cycles, as I say, the unemployment rate goes up like a rocket and down like a feather because it's easier to destroy a job match than it is to find somebody, recruit them, and build one. So we should always be forward-looking, and we should be thinking about what would it look like if the job market deteriorated? What would it look like if the economy, if we got supply shocks, it was overheating? We're getting international shocks, if you want to call them that, by actions of other central banks. So I think we do need to think about that. We probably also want to consider, was it you guys coming back into the country that ruined us, or what happened with the time?
Or not paying up on our bet, or I knew you were going to get to that some.
Joe got back on Thursday.
I got back on Thursday, right when it started.
Hey guys,
That was the night it happened. What do you mean?
Yeah, exactly.
I thought the same thing, Austin.
Just one other thing. We had at the pandemic close, we were at 2,300 on the S&P. We just have come so far, Austin. We were at like 5,500. In previous times where we do see a little bit of a backing and filling, it just seems like I'm not saying it's going to happen, but there's plenty of room where you could make a case that if there was any type of regression or reversion to the mean, and then the wealth effect on that, I don't know what that would do to the economy.
Yeah,
I'm just
look,
wondering whether it could be more than a mild recession that we've built up.
Oh, I see. I thought you were saying if you thought there were frothiness in equity markets and some of that came off, could that generate a recession?
Right.
That sounds kind of like the original internet bubble popping that generated a mild recession.
Yes.
Right.
The housing bubble popping generated a massive recession, but it was more leverage. There have been other times, of course, as you know, where the stock market had big corrections and it didn't generate a recession. 1987, back in 2015, you remember we had the big sell-off starting in China. People were nervous. It didn't turn into that. So the Fed should be forward-looking. We shouldn't just be looking backwards. And it's absolutely on our screen. The law tells us maximize employment, stabilize prices. That's what we're going to do. And we're going to take all the measures. And let's not overreact to 1 month's number. But if that's a sign of something that's happening longer term, then we should respond to what those forces are.
Hey, Austin, while you've been talking, and I don't know if it's because you've been talking, the yield curve on the 210 disinverted and now is positive for the first time since 2022. I wonder if you could factor that into your thinking. Is that a development that you think about in terms of having economic outcomes? And what is it reflecting, in your opinion?
Yeah, look, think about that a little. As you know, previous to this period, which is extremely unusual, the inverting of the yield curve is a very strong indicator of recession. But it's been inverted for 2 years, and we didn't have recession. And I've mostly written that into this was such a weird business cycle, and people have been anticipating that rates, the differential between the short rates and the long rates, and their expectations were kind of driving that in a way that was ahistorical. Now, just be careful of what's the cause of what. So if people get scared and the long rates come down and they think the short rates are going to fall, it's going to affect the yield curve in a way that's going to de-invert it. But for the same reason, an inverted yield curve didn't have to be an indicator of recession. The uninversion of the yield curve doesn't have to not be an indicator of recession. So that's one piece. I definitely watch it, but it's not definitive for me.
Hey, Austin, real quick, Jeremy Siegel was trying to pound the table, say, you need to have an emergency rate cut effectively right now, and said that if you did, that the market would rip. And I said to him, well, isn't it possible if there was an emergency rate cut that the market would actually think the opposite? They'd think, oh, my goodness, this is actually a much bigger problem than we know. What is the data that you would be needing to look at between now and September to actually make such a decision?
Well, what did he say when you asked that? Because that's a good question.
Which question? I didn't ask him what data that you need to look at.
If the market panicked because there was an emergency rate cut, I saw that he said they should cut 70, the FOMC should cut 75 or 150 and another 150. What was Jeremy's answer for would the market panic because
he said it would rip.
He said it would rip upwards.
He doesn't need any more data. He says you need it. He says he's already seeing it.
Look,
I think he's arguing the market is part of the data stream. That's part of what he's saying.
Yes,
and I'm not sure that's the case.
That's exactly what I was about to say. I've known Jeremy for some time. I'm a great admirer of his work. He does have a kind of a market-centric view that the Fed should react to that. And spiritually, something inside, I'm totally the opposite. My thing is the law doesn't say anything about the stock market. It's about the employment and it's about price stability. And let's maintain financial stability as that's going. If the market moves, give us an indication that over a long arc, we're looking at a deceleration of growth, then we should react to that. But I want to caution.
He was talking more about how restrictive he thinks we are
because of the market.
He was doing inflation calculations and where Fed funds are right now. It wasn't so much he was saying that the market's looking bad. He was saying you're way too restrictive, which you probably agree with.
Yeah, look, that's what I say. We're very restrictive, and you'd only want to be restrictive like that if you think the economy's overheating.
Okay. Austin, thanks for joining us. I think we'll see you in a few weeks.
Great to see you.
Coming up, RBC's Halima Croft is going to join us, talk about the oil market and what traders are watching amid the market sell-off. Oil is doing what you'd think it would do if there was an imminent slowdown.
All right. Wow. That was crazy. Okay, so, well, there's Goolsby for you, being Goolsby, and I don't know how much we really got out of that, but I guess, I mean, in fairness, he was asked about this idea of an emergency cut, and I personally don't think that's likely. I mean, I think the Fed going for an emergency cut means that they care way too much about the stock market. So I don't think that's likely. I think they care much more about their concerns over inflation. Now, again, I mean, Fed can do whatever they want. What's 25 basis points going to do here or there? It's going to do nothing. It doesn't really matter. I think what really matters is how should I phrase this? A takeaway from what he said that I thought was really interesting was he was asked, you think the stock market selling off could cause a recession? And he replies with, you mean like 2001? Like, oh my gosh. Frankly, like, I thought it was really cool because that's exactly what I've been saying for 3 weeks now, is we are one stock market correction away from a recession. Now, was I expecting the NASDAQ to plummet 6% today? No, of course not. I mean, Bitcoin down, 15% in the last, 24 hours or whatever it is? And this crazy rapid collapse, right? Excuse me. I don't think anybody really expected that magnitude. Were we expecting a sell-off? Of course. We're expecting to roll off a cliff? No. So it's crazy. But making this reference to 2001 is exactly right, in my opinion. It is, look, in 2001, you had a stock bubble driven by .coms. In 2008, you had a housing bubble. And in 2023-24, you probably had an AI bubble. You overspent on stuff that increases product quality a bit, increases efficiency at companies. Does it really make companies money? No, not yet. Now you look at it. Oh my gosh, Taiwan Semi is down 11.5%. I eliminated my exposure to Taiwan Semi and ASML. I think it was Thursday or Friday. Glad I did. My only regret is not having sold more now, of more of everything else. But it's okay. I wouldn't be surprised personally. Oh yeah, and ASML. I want to see what they're doing. So TSM's down 11%. And then I want to talk about what I think for the market open. Okay, they're only down 4.8. So I wouldn't be surprised if the market bounces at the open. That there'll be a lot of buy, just because this sort of diving off the cliff on Japan feels a little crazy. But you've also got this this potential what's it called, invasion in Iran, which is no bueno. So that is probably coming this evening, mind you. Kevin, where are you on the bull-bear scale? Well, I don't think what happened today in the stock market really moves me. I care about U.S. economic data. And so last week I ended the week at 2.5. So pretty bearish. The move today is wild. I don't know that the move today intensifies my concerns. I mean, I suppose to the extent that I think a stock market correction increases the odds of a recession, yes, that's bad. But I don't know that my belief that a recession was coming is really amplified that much. I mean, maybe a little bit. you know, because the more of a substantial sell-off you get and the more panicky in the markets, you do trigger recessions. I'm so glad Goolsby was asked that, because it's literally what I've been pounding the table with for the last 3 weeks is, if we have a correction, we are going into a recession. We are one stock market correction away from a recession. Mostly because I think the economy is so sensitive. We are so on the edge that as long as the stock market keeps going up, it's fine. Everybody can sort of hide behind stock valuations. But as soon as you get a stock market correction, companies are just gonna fire. They're just gonna fire everyone. Well, obviously not everyone, but they're like, layoffs will come rapidly. You know, Google's like, oh yeah, we expect to end the year slightly positive. Nah, man, not when Google. I mean, what's Google off highs right now? Let's see. Google's off 6.4% just today. That's crazy, mind you. Yeah, look at this. So Google is now at 157.50 divided by 193.31. They're off 18.5%. Take another 10-20% off here. Guaranteed layoffs. Guaranteed layoffs. So the question now is like, do we hit a floor here, or is this just the beginning? So again, I wouldn't be surprised to see a bounce after the open. Like 6% on the NASDAQ is freaking crazy. It's already bouncing a little bit, 5.5%. It's insane for something outside of the US, like Japan or geopolitics or whatever. So, like, I'll put it this way. If we opened at negative 6%, part of me on a trade basis would be tempted. I don't know if I would. Because I don't think this is the best market for call options, but I'd be so tempted to snag calls that open, ride the first bounce. But I do think, and I want to be clear about that, I do think the first bounce will be sold. So I don't think, you're magically going to end the day green. I suppose there's always a very, very small potential of that, but I don't see that happening. I do think there are going to be a lot of people buying the dip under the belief that the Federal Reserve is going to come save the day. I don't think so. I don't know. There is talk about that. Let me see here. Where did I see it? Treasuries surge as traders. Okay. Traders bet on emergency rate cuts. Let's look at it together. Yeah, traders betting on and Fed doing are very different things. Treasury surge. Okay. By the way, hold on. Why is that crap not working? Hold on one sec. Oh, it is working. It's just too low. There we go. Yeah, I wanted to get this going. Don't buy. Got it working.
Reamed, double reamed, triple reamed, selling spree, reaming spree.
Yes, finally, I have found you. Okay, so Treasuries surge as traders bet on emergency Fed rate cut. Jobs data stoked worries. Traders price in a series of cuts through the end of the year. Bond traders are piling into bets that the U.S. economy is on the verge of deteriorating so quickly that the Federal Reserve will need to start easing monetary policy aggressively, potentially before their next scheduled meeting, to head off a recession. Previous worries about the elevated risk of elevated inflation have virtually disappeared. Well, by markets, but not the Fed. Wow, traders now see a 60% chance of an emergency quarter-point cut within a week. Wow. Okay, all right. That's very interesting. Wow. 5 rate cuts through the end of the year now being priced in. I gotta look at this. The market is overshooting and getting ahead like we saw last year. You need validation for more data. Totally agree with that. I don't agree with the Fed doing that. I agree that the Fed will do that. Sentiment has shifted sharply. Blah, blah, blah. Deeper cuts. Blah, 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 blah. Taylor rule now says Fed now 7 rate cuts behind the curve. Yeah. Let's listen in over here for a moment. I want to look up those rates too.
Almost 1,300 points on the Dow, but the Nasdaq's the thing to watch right now because you're looking at that off 5.5 points, or 5.5%, I should say. Dow off about 3%.
But the Dow was off 4%, or so add 3 to that, so we could almost double.
Flip the Bitcoin real quick because you're going to look at that now. I think we're going to be in the $50,000 range.
Make sure you join us tomorrow when the sun comes up. Squawk on the Street is next.
Oh, here comes Jimbo. Woohoo! New intro music.
Good Monday morning and welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We're live from Post 9, of course, the New York Stock Exchange. Carl Quintanilla is in Paris at the Olympics. Let's give you another look at futures. You just heard Joe and Andrew talking about what is going to be a significant sell-off when we begin trading 30 minutes from now. And as you might expect, of course, that's where we're going to begin the show. That global market sell-off, stocks are set to tumble at the open amidst worries about an economic slowdown. This follows Friday's weaker than expected jobs report. The Nasdaq, by the way, already is in correction territory heading into today's session. And overnight in Asia, one reason why we're seeing this global sell-off, Nikkei plunged, yeah, that's true, 12%. That was the biggest one-day drop since Black Monday back in 1987, a day that Jim and I both remember well. We were both working back then, so we've been through days like this, I don't even know how many times, not to mention the global financial crisis. So I always want to put these things in perspective. Japan was unique in a way, though. That kind of a sell-off, specific, Jim, to the yen carry trade, to what has been a significant appreciation in the yen as a result of that rise in interest rates there to try to combat inflation. We'll talk more about the connections there, but give me your take on this morning and what we can expect.
Well, I think that when you see the Dow and Nasdaq decline by 1% every hour, lockstep with Japan, I don't think you can therefore say, you know what, the problem here is the data center slowdown. I mean, I don't want to foment problems. There's enough things that are wrong. I don't need to make up anything. But this is off of Japan. And we do have treasuries in a kind of a weird spot where when yields plummet, we all think that there's something wrong. We got to take a breath here. I mean, the idea that we're in a recession because the Fed didn't move a quarter point, that's fatuous analysis. The idea that the data center is a black hole and everybody who spends on it, that's not reasonable. The idea that you can just go buy it knowing that these forces that you can't see might still sell, whether it be Buffett selling more Apple, who the heck knows, or whether it be the Japanese coming back in tomorrow, well, you have to deal with that if you're trying to buy something. Yet, the idea of buying something is not a bad idea.
Right.
Because there's a lot of stocks that will not deserve to be where the futures take them this morning.
I would add, you know, in making the round of calls to that group of people that I often call on days like today, I'm not hearing any dislocations in credit. That becomes very important.
Not yet, buddy. Just wait for credit to roll.
Is this spreading in a way that is even more concerning? Nothing in terms of credit. Liquidity is very high. Obviously, in a way, you've already got financial conditions easing, right? Sure. As a result of what's going on. And then that question, of course, as to what the Fed will do. There are a number of people popping up today said, emergency meeting.
Yeah,
and then I'm curious to get your opinion because there's the division of would an emergency meeting be good or would it scare people, scare certain market participants if it were to happen?
Maybe they're behind.
Not that it will.
I listened to Professor Siegel. I've listened to Professor Siegel all my life, and I thought that he was, I don't want to judge anyone as good as he is, but I would say he's too adamant. I think that the people who are reacting to the stock market going down are people who are not in touch with what you and I have seen over the years. Mm-hmm. This could be more like 97, Russia. It could be like 98. It could be South Korea. We can react to them. There could be a hedge fund that's on the wrong side of the Japanese carry trade, which we can discuss. But
yeah, whatever. I'm going to throw in my commentary here. Look, the market, I just looked. Rate cut bets have absolutely exploded. And the yield curve sitting at roughly 0 right now. Like, it keeps going back into inversion and uninversion. It's just teetering around 0. Who cares? 1 point here or there, it doesn't matter. The market is pricing in 2.4 rate cuts for the September meeting, 4.18 rate cuts for November. So that would be 50 basis points, 50 basis points. 5.4 rate cuts by December, and 6.4 rate cuts by January. So those are some pretty big rate cut expectations. You do also have your last chance expiring soon to buy Bitcoin above $50,000. That opportunity seems to be quickly fading. I did suggest that in our course member chat over the weekend. You can see that here on X. I wrote, last chance to buy Bitcoin over 60,000. Opportunity ends soon. Coupon expiring soon. That was yesterday at noon. And now I'm like, damn, I misspelled 50K. I'm like, oh gosh, there's like a ouchie wouchie. But anyway, I do think some form of bounce would probably be reasonable at open. I don't know that with certainty. It does seem like you're getting a little bit of a bounce right now. You're getting Goog trying to rotate up a little bit here. ASML's trying to climb back on top of its line. Apple's trying to climb up a little bit. Look at that. Tesla's trying to climb a little bit here. And Phase isn't really going anywhere right now. What else do you have here? DoorDash. Wow, DoorDash 5%. I also feel bad. I sold out of this one totally. Embraer, the plane manufacturer. But I hate to say it, plane manufacturers are going into recession if you have a larger recession. They do have large backlogs, but orders tend to get canceled. Also closed out my exposure to Palantir last week. And Trade Desk, which I felt really bad about both of those because I love both of those. But geez, Lord, Trade Desk now down 7.9, Palantir's down 12. It sucks. It's just crappy. Oh, wow. Etsy down 4. Look at that. MSFT down 4.3. Wow. That's a lot. Yeah, it's going to be a very, very interesting open. But yeah, there's this thesis of maybe grabbing some form of bounce call options at open. But I don't know. You know, it's a bearish market. It's a bearish time. Usually I find I do best when I just follow what the market trend is, right? As they say, the trend is your friend. And one of the things that you find with the trend is, you know, when the market's trending up, stick to calls. When the market's trending down, stick to puts. Market's trending down right now. Fighting the trend is dangerous. Even if you have a bounce at the open, again, I suspect it'll just be sold. But who knows? You know, no idea. So Jeremy Siegel now calls for an emergency 75 BP cut. Yeah, no, I don't see that. And then how are we doing with the VIX? He can call for that all he wants. Wow, the volatility index is at 60. 60. It went up to 65 there. Wow, how glorious, huh? Look at that. As soon as we broke that line, we really broke. But let's go out to the week chart. Look at that. This was COVID over here. COVID was 85.4. Now, what I'd like to do is I'd like to go, let's see here. That doesn't even fully update. But let's go to COVID on the 1 hour chart. And let's go see. That's actually, let me go to the day chart. It'll take forever to scroll back there otherwise. I want to go see how long that VIX stayed elevated. Yeah, that's what I thought. Because a lot of people are like, oh, it's not going to stay up this high forever. That's true. It won't stay up this high forever. But look for a moment here. Look at this candlestick. You ran up to a high of 49 on this candlestick right here. And then you actually stabilized. So you ran up to 49. You closed at 43. Stabilized. VIX falls 21%, up 1%, down 3%. So you get stabilization. People are like, oh, it's okay. Everything's fine. This is your bounce, right? This is the market bouncing. Everything's okay. Don't worry. Everything's fine. And then you really get the VIX going up. And it wasn't one day. It was during COVID. It was 1, 2, 3, 4. That was a slight down day. But still, mostly the trend here is up. 5, 6, 7, 8, 9, 10, 11 days of VIX going up. Let me make sure I read that right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 11 days. after you had, these 4 or 5 days up. And that was COVID, which was quickly bailed out by the Fed. I don't think you're going to have as quick of a bailout here. Let's look at 2008. So I'm going to write that down. So I'll write this down, VIX. So after the first spike to 49 intraday during COVID, the VIX settled for 3 days and then rocketed up to 85 over the next 11 days. Okay, now let's try 2000 and what's it called? Yeah, the VIX, okay, now it's showing 59, so you're already getting a relaxation here in the pre-market. Let's see here. In 2008, you had a slow rise in the VIX, then you had a breakout to only about 36. But look at the period of time that the VIX remained elevated. And this is actually a substantial period of time. How many days was it over 50? So, in what day did we break? There it is. In 2008, VIX broke 50 October 6, 2008. And it did not close under 50 until here, which was December 18, 2008. So that puts you at about 2 months, roughly. 2 months, 12 days. So, you could definitely have these more extended periods. COVID is a little bit of an abnormality because it was such a quick bailout, right? Pandemic. So probably artificially short. COVID with Larry Kudlow's V-shaped recovery. We're going to have a V-shaped recovery. Who was here for that back when we were covering the market back then? That was nuts. Now let's look at the dot-com era. Wow, you never actually really got crazy vol during the dot-com era. Oh, that's crazy. Now that's actually wild. So, and I think we much more resemble the dot-com era today. In 2000 to 2003, VIX never broke 50. Yeah, never closed above 50. You did have volatility spikes above 30. 30 was lasted for, maybe a period of about a week here. And then it looks like we were above 30 July 02 to about August. You could probably extend it to about here. The second half of 2002. VIX above 30 for the second half of 2002, and briefly, how long is this? This is probably actually a little longer. November and a couple months in 2000 and 2 months in 2001. Yeah, that's interesting. So this was, what's remarkable is, consider this, in the dot-com era, you had a 3-year, well, it was more like a 2.5-year sell-off. So 2.5-year sell-off, right? COVID, you had a 30-day sell-off. And in 2008, let's see, in 2008, go to my day chart here. I'll have to also go down to like the 200s. So 2008. Oh, there we are. Oh, wow. We're all the way down to like 30 on the NASDAQ, 20. Okay, 2008 sell-off. Your largest sell-off, I'm not really gonna, I don't really care about this nonsense. Your heaviest sell-off occurred August 08. Should have been due about February. So you would have been 4, 5, 6 months. February was about here. Oh, February, March. Yeah. This is beginning of March, end of February. So you had about a 6-month sell-off here. That's a lot, folks. You know, people panic over 6 months, six to 7 months. So 6 to 7 month sell-off. I think that's really useful to consider, because what it does is it tells you that the more rapid the sell-off, the higher the VIX. And now I know people are like, no shit, Kevin. I know. But my point is, comparing it, here, look on screen here, you can see what I wrote. Comparing it to other crises, it's very interesting because COVID, you know, you had a 30-day sell-off, so you have this massive VIX spike. 2008, you were selling off for 6 to 7 months. You were selling off for 2.5 years in the dot-com bubble. I think we are substantially more likely to be in this right here, in this range. You know? Personally, I think we're looking for a sell-off that lasts at least until the election. So that's, you know, August, September, October. We're 3 months. We're about 3 months from the election today. At least 3 months. And if we're in a recession then, by then, you know, it could last longer, right? It could continue. And then the question is, how long? Well, I personally don't think it would last as long as the dot-com bubble. Everything happens a little faster these days. So I'd probably lean more towards this. So I'd say it could continue into, you know, Q1. So that's, this is not obviously COVID style. So anyway, that's very interesting. So let's see if things are actually going to try to recover here now in El pre-market. But we've got, yeah, the VIX is falling now, sitting at roughly 56. And this always, the VIX usually takes about 15 minutes to really show up on a lot of these apps. So, you know, especially when you're trading it, you should be well aware of that. But anyway, so, okay, so we'll see what happens here. Then we've got Google. Yeah, Google's still trying to climb into the open. ASML sitting on its line. TSM's down 10. Jeez, Lord. Affirm's actually trying to climb up. Amazon's trying to climb up. The Qs are trying. Apple's trying. Tesla's trying. Enphase isn't doing too much. IWM small caps. Oh, what a surprise, down. Oh, look, your coupon expired to buy Bitcoin over 50,000. And now, unfortunately, you only get to buy it under 50. Wow, sucks. Is that 40? Oh my gosh, man. I wish I had held calls on socks, baby. But, you know, you can't woulda, coulda, shoulda, otherwise you'll make mistakes in trading the next day. So, anytime you woulda, coulda, shoulda, you gotta be very careful. I do have options, short Bitcoin. Those should do really well today. I've been talking to course members about that one ever since Kamala came in. Short BTC has been very interesting. Wow. Pre-market. Oh, wow. That just flew into the money. So I'm short BITI. Oh, dude. BITI is up 20 freaking % this morning. Thank you. Wait, how long? What's my expiration on this? Oh, September calls, baby. Oh, dude. Those are, you know, 5-6 week calls. That not only just went in the money, but are up 20% in the morning on the underlying. So I wonder what that 5 or 6 week call is gonna look like. That's sick. Well, I guarantee, like, I bought it for 34 cents, and we're literally now in the money 54. So I think I got a double in the bag right there. Probably at least a double in the bag on that option. Let's freaking go. Okay. So, Kathy Wood thinks we're in a recession. Yes, she did. She confirmed that we're in a recession in her opinion. Yeah. Yep, Shannon, we don't do woulda, coulda, shoulda. Let's see. But Kevin, this time is different. I love that. Yeah. Booms and busts happening faster and faster as time goes on. Could all be thanks to the analytical power and transparency we have today. I don't think human psychology has changed much. I think it's probably because it's a lot easier to just go in your app and panic sell, you know, cancel buy orders and stuff. So, you know, I wouldn't be so enthused that all of a sudden, you know, like people or programs or whatever any smarter. Human psychology doesn't change. Belshazzar, what are you talking about, bro? The only way you could chat right now is with that blue wrench. I think you're missing the point. Missing the point, homie! So, anyway. All the carnage, Affirm's only down 12%, puts on Affirms. I'm very tempted. But again, I think let the market bounce at the open. So I'm gonna write this down so I don't forget. You know, let it rally. Let it rip, baby. So rally off open. Yeah. Cool. Oh boy.
Stocks that are, here, let me give you an example. It still got up a little bit, but Micron. Okay, you look at Micron.
Yeah.
Micron is going to blow away the quarter. There's no doubt about it because they are selling high bandwidth memory, which is there's tremendous demand for. But the stock has just been clubbed. So what am I supposed to?
That demand's about to evaporate, broski.
Right. I mean, if you don't buy the price, you have to ask yourself, would you sell the price? Would you sell Micron at 87? What, hoping that you get it back at 82? I can't play that game. I can't. It's just, viewers at home can't.
What, you know, we look at the bond market now, and every note that's
recession.
coming out, yes, recession is what you're starting to hear about. At least the possibility of said is increasing. There's no doubt. I would share, though, this, you know, this SOM rule, remember that, which is that every 0.2 rise in the unemployment rate triggers this rule that says basically you got a much better chance of a recession.
But that's over-concluded.
But B of A saying they don't happen.
Everyone in chat's like, well, I guess you could guarantee Micron's done. Oh, y'all are terrible. Micron down 5%.
Don't buy. Reaming spree.
I think the bear one's a little too loud. Yeah, maybe it's just too scary. That's what it is. Make people jump out of their seats here. Yeah. All right. Well, so yeah. By the way, congratulations to all the subscribers who sub to Meet Kevin channel, the main channel, obviously. We're now over 2 mil, so y'all are part of it. So thank you so much. That's really cool. Yeah, we're at 2,010,000 now. Very cool, and very excited to get to share that opportunity with y'all. Very, very cool. So, thank you. You're welcome to subscribe over here as well, live on, well, we're live on like everything right now, but usually Meet Kevin YouTube is where a lot of people go. Meet Kevin Market Live. If you type that into YouTube, you get it. But, yeah, we've got, I am streaming this for some reason on Facebook to all 5 of you. I'm streaming this on LinkedIn, X actually has quite a few folks watching, like 14,000. And then we've got Twitch to all 172 of you. So anyway, thanks for wherever we are. Oh, it's on Rumble now too, but I don't think anybody actually watches the Rumble. I don't know. Do you have to pay money to actually get the Rumble stuff to show up? They made me like pay like $10 a month just to actually like do a live stream with the API. I thought that was entertaining. Oh no, it's just spam. Telegram spam. Oh, 5 watchers on Rumble. Hello, 5 watchers. Well, that's cool. Probably all crypto bots. Hey, thanks, Kevin. Thanks so much for sending me 0.8 Bitcoin back after I sent you 0.4. I'm gonna send you more. Such a scam. It's so dumb. But hey, it works. Otherwise, these scammers wouldn't be doing it. It's crazy. You know? It's really sad. It's very, very sad. So, all right. Yeah, Amazon. Oh, look at that nice little red candle there. I don't know what's going on. But the open's going to be wild. It's also kind of wild to say I have no Tesla exposure right now. Last week, I've actually been saying it for a few weeks now. I'm like, this sucker's going back to 150. I was not expecting it to happen this quickly, I will say. It's at 187 right now. Yeah, it's crazy. Somebody here says, I have a beachfront property in Arizona I can sell you for cheap. Where? That's funny, Zonfree. Let's see here. I sold everything last Monday at the top of the market when you said that it was going to sell off. Thank you, Kevin. Well, congratulations, Paul. Good job. Palantir getting creamed, reamed, and edged.
Reamed. Fetch me. Selling spree. Poopy doopy.
Overdrove. Wouldn't rate cuts only worsen things by further weakening the USD more sell-off? I mean, a weaker USD is actually good, right? A weaker USD would support the carry trade. It would actually help people in the carry trade situation by reducing this, by making the dollar, well, rate cuts make the dollar less desirable because bond yields go down, so the dollar weakens, which if the Japanese yen is stable would actually strengthen that or tighten that spread. So no, rate cuts could help the Japanese trend, the carry trade. Rate cuts could signal, emergency rate cuts would certainly signal panic, and they wouldn't be enough, in my opinion, to really make a difference unless they were significant. You know, you would need multi-percentage point cuts. So I don't know how I feel about that. Yeah, we'll see. We'll see. Anyway, all right, let's listen to Jimbo for a moment.
Capital, because obviously Intel has been capital constrained,
Yes.
and is even more so, which is why they're cutting the dividend, cutting back on CapEx, in part because they're trying to get to this day where these fabs are going to be up and operating, and that they can reclaim what Gelsinger says is their rightful place as a leader.
Well, I love the attitude, but they don't have the horses.
What do you mean when you say the horses?
You have to spend a fortune to get these things going. We moved our foundries to Taiwan because it's much cheaper. He's going full bore, Gelsinger, in the most expensive areas. I thought his conference call was, it was frankly unconscionable.
If China
and also,
were to invade Taiwan,
Not
that
an
would
issue.
change everything then, right?
But they
Wouldn't
need
it?
geopolitical.
Yeah.
They actually need you. I mean, there's something. Like, yes, it'd be a safe zone if China. I don't even want to put that out there, but I thought he was incoherent on the call. And a lot of the questions were directed to the CFO.
Nah, Jimbo's not really got anything for us. That's fine. Okay, so we're about 45 seconds away. Bitcoin sitting now at 49.8. Ooh, look at that giant sell-off right before the opening bell. I'm actually really curious to see what happens right at the open. It's going to be really interesting. So we'll see. We'll see. And let's go ahead and hit the bell here and find out.
2009, he was let go by Intel because he was doing graphics. Well, who won in graphics? NVIDIA.
What a crappy day to ring the bell.
A little history here. We should not presume that Intel stumbled. We have to presume that Intel's flat on its face.
Got it. All right, get ready. It's going to be a lot of red on that real-time exchange back at our headquarters. Here's the opening bell. And here's the big board. CFM Energy celebrating its name and ticker change over the NASDAQ. Hancock Whitney Bank celebrating its 125th
That was a quick
anniversary.
I always
Well
like
done.
when the 1 point back there. It's perfect out.
All right, Jim, given what you've said previously, and certainly what does not seem to be in any way systemic, but simply a significant sell-off that we're showing you right there, what would you be looking at most closely to sort of determine that perhaps that hits a level at which you'd say, I'm ready to step in? Is there a name or two that kind of fits?
I'm going to give you an odd way to figure it out. I think you have to see, you have to want to see the VIX come down, and that's the obvious one. But you want to see the stocks that have just been monster good start coming in. I like the fact that Pfizer's down, okay, because that's been some sort of flight to safety. I like the fact that the drugs are down, that the foods ex Kellanova, we can talk about that, are down. That's sign that maybe that people think things are overdone, because the safe havens were insanely positive last week. But look, I think you buy a little. Just buy a little. You know, it's a long day. But I also think that you're reacting to prices that are being set by other countries, not by ours. And ours are now being doubled down by freight. So you have the countries in Japan, and they're not just Japan. There's other places that are geared because of your yen carry trade.
Yes.
But then you have those sellers, which a lot of times hedge funds. You have Masa-san, we don't know what he's doing. You have the China slowdown, which is impacting everything. And then you have the fear of the Mag 7. And all of that combined gives you some opportunities.
It may. Let's sort of go through things here as we anticipated. Of course, many of the mega cap tech names are down sharply. By the way, nothing that our viewers don't already know. We've been dealing with what initially was a significant rotation out of those names into these smaller cap stocks. We talked about.
Yeah, right. That was a mistake. You go recessionary here. Look at that. Nvidia's still down about 14%. You've got IWM's down 5.2%. You've got Embraer's down 4.8%. Snap's down. What else do you have here? Google. You're not really like flying off the shelf here to try to recover. You'd think there might be a little bit more of a move here, a little bit more of a bounce, but not really seeing that at the moment. Let's see what else you have here. You've got, I want to see what Tesla's doing at the moment. Tesla, it's trying. Come on, baby. It's trying to come back up. Come on, baby. Give me a little bit of love. All right, let me listen in over here again.
Wiping out the gains. A lot of these stocks have very, very big gains. I'll give you an example of what I think is interesting. Apple's quarter was really good. And again, they've got the best gross margin situation because of AI. The service revenue is really good. The stock was flying. Now the stock's being knocked down by a guy who never really knew why he bought it, and the fact that he saw a lot of kids at Dairy Queen eating and using their cell phone.
You're talking about the greatest single investor of all time. Well,
David,
I'm sorry, man. Buffett is. Period.
He still has
probably
a giant
the smartest
position.
too.
He has a giant position.
He does, but saying that you're talking about a guy who saw people doing it at the Dairy Queen
I'm
is
just
not
saying,
being particularly respectful of the single greatest investor
that's
we've
true,
had.
And I don't mean to be disrespectful. I am saying that there are people who bought it because he bought it, and they are selling it. They were not on the call. They don't know how good it is. Warren Buffett is the best ever. I'm just saying that the stock was at 218.
There are also people selling it, Jim, because
it's up a lot.
We've talked a lot about the AI future in the iPhone. You've made this, I think, very interesting point about them being somewhat of a free rider, not having to
so
spend
if it
the same.
turn out.
That said, the software may not be there when the phone is there.
November.
And does that delay this potential significant upcycle in sales?
No, it lengthens it. I remember the sales. You heard, we had Mike Siebert here. T-Mobile
Sievert,
is not going to lose
T-Mobile.
he's not going to lose his share gain. Verizon and AT&T are flush. They are all going to contribute to Apple's bottom line by saying, look, if you open an account with us, we'll give you an Apple. And that's why I heard someone say, isn't Apple too expensive?
Yeah, I thought it was interesting when Sievert said, yeah, we'll be there with the promotions if we have to be. But again, my point is that the software may not be there to do all the things you want to do with this phone when it comes to the new AI world.
Oh, that's true.
Whoa, Robinhood's down 20%? Holy crap. Whoa, that's freaking nutso-dutso. Wow, that is crazy, huh? That is something else. Well, what are you gonna do? That's a lot on Robinhood. Holy smokes. Qs are moving. What else do you got here? You've got Micron down 6.8. Yeah, I mean, I want to see what some of the suits are saying here. And let's see. Tesla's still trying to move up. And so are the Qs. You've got Vol has sort of relaxed. That BITI trade. Oh, I was on the wrong screen. That BITI trade, by the way, was just popped up quite a bit. I actually got that. That was I bought it at like 32 cents, somewhere around there, and I ended up getting close filled at $1.18. That's freaking nuts right there. Absolutely nutsos. So I mean, I'll take it. That's what is that? $1.18 divided by 0.32. Oh, a 3.6x. That's crazy. So anyway, we'll see what happens. That's just on a BIT. That was on Bitcoin short, on an option. That's crazy.
Sit down with Tim.
All right, let's listen in.
In the go out or the go in.
Oh, you know, I want to try Doomberg just to get what the suits are saying. Let's listen in over here. Okay.
Yields already start to come down, not because inflation expectations were coming down, but because there were growth concerns coming down. You saw a lot of weakness in manufacturing and a lot of weakness in the labor market besides the payrolls number. You look at job openings, those were stagnating. You looked at quits, those were falling down. One of the most important recession indicators is really looking at the job differentials. Job plentiful minus jobs hard to get. It hit a cycle low. So there were a lot of elements churning under the surface that were telling us growth is going to be coming back. Jobs are not there, wages are not there, and that means trouble for the consumer. I think Friday, again, was a culmination of all of that. Add in the unwind of the carry trade that you were seeing as the Bank of Japan raised rates and the expectation that we would be lowering rates in September after the Fed meeting. All of that coming together, I think the market came to realize, wait a minute, things maybe aren't as good as we thought. Maybe that soft landing is not a given. And that's why we're seeing the reactions we are. We also have geopolitical events going on that adds to the uncertainty.
Yeah, I was surprised actually that the market closed up on Wednesday after the assassination of a Hamas leader in Tehran by Israel. Nonetheless, it looks like the market has discounted that, Victoria, and is more worried about really the jobs picture, right? But is that recession indicator going to be on as GDP was 2.8% in Q2? Atlanta Fed Mike McKee was just telling us is forecasting 2.5% GDP in Q3. That doesn't really feel recessionary at all. Why would the Fed come in with an emergency cut?
I'm not sure they will come in with an emergency cut. I know the market is talking about that. Are the expectations of a 50 basis point cut in September moving much higher? Yes, and that's probably more of a possibility than a cut before that meeting. Jackson Hole will obviously be an opportunity for the Fed to lay out its plans and give us a better clue as to what's going on. But I do think you're looking at, look at 2-year yields to Fed funds. It's minus 164, 165 basis points. Again, we only see those levels prior to recessionary periods, 2000, 2008, before the bank crisis in 23 and 98. We're seeing all that. And the labor market is telling you in a lot of different ways, like we were just talking about, with wages coming down, that the consumer is going to be at stake. We're hearing it on the earnings calls as well. Credit card delinquencies going up, auto delinquencies going up, travel coming down, restaurant spending coming down, big ticket items and luxury items spend coming down. So I think the market is starting to get a feel that, okay, we are slowing. The Fed did not, loosen those restrictions at all. So we have a little bit more time where there's still a little bit of squeeze on the consumer. All of that is concerning the market right now. I think we'll see the Atlanta GDP number come down over the next couple of weeks.
And even at the top of this hour, we have, of course, that ISM services data coming out, and you have a market that is kind of on tender hooks here, isn't it, Victoria? If you think about kind of the forward catalysts, how long do you sit out this market for? You had mentioned a little earlier that this wouldn't necessarily be your time to dive right in. What would be that time?
Yeah, I was actually listening to some technical analysts this morning, and they're saying in the short term, right, in the next couple of weeks, you could get a bounce from an oversold position. I mean, look at the levels that we're trading at right now. These are huge drops over the last 2 trading days. So you could get a short-term bounce. Maybe that's an opportunity to trim some names and get some cash available. But in the intermediate...
100% that's what's going to end up happening, in my opinion. You know, I think, like, you get a rally, like we said this even before the market opened. You get a rally at open, and then people are going to start dumping. It's just my take. I don't know, we'll see.
So I think I would wait a little bit longer. You're not going all in a position at one time. You can dollar average a little bit on these days where there's pullbacks. I would just be cautious and kind of take your time over the next couple of months, because I don't think today is going to be our final down day.
All right, Victoria, 100%. Great intel there. Thanks so much for joining us, Victoria Fernandez of Crossmark. This is Bloomberg.
All right, let's see what else we have. We've got, let's see here. The disinversion of the yield curve is far scarier than inversion. Well, yeah. Here's Tesla, by the way. Looks like you're trying to stabilize right here at about the 200-minute moving average. It's down about 8% on the day. You've got a good bounce there that you had about 182. The rally slowed a bit here, so not getting as much of that push that you had there. I don't know if you're already getting selling, but you probably are already getting selling pressure. But I wouldn't be surprised that during the day here, you get sort of a resurgence of some of this push up. So again, that's a belief that I have. I don't think that this market falls off the cliff as much as markets are pricing it right now. So there are high risk plays to play some calls on some of these bounces. Just be aware they're probably going to go lower over the next few months. It's something to consider. Firm down 9.3, Amazon still down 6, Apple 5, Enphase. Oh, look at that. Bitcoin's almost up 1,000. So you had sort of a nice little rally move there, almost to about 52. It's back just under 51 right now. Nvidia's also trying to push up. Wow. I remember when I was talking about Coinbase going back to 150 and it was like 250 and people were like, "You're crazy, Kevin. You're crazy." Here it is. I also had somebody in my office and they're like, "Man, I wanted to buy more Robinhood or whatever." I think they sold some Robinhood and they wanted to rebuy it or whatever, and it was like $24. And I'm like, "Don't worry, you'll get your chance to rebuy it." It was like in the low teens or whatever. Bro, this morning it went down to $13.98. It's crazy. Now, why Hood went down that much? I don't know. I don't think they necessarily deserve that. I get everything being down 5%, but Hood? Man, somebody destroyed the order book over there. Some people are saying because of the Bitcoin fall. Because, they do make a lot of money on Bitcoin and options, in fairness. That's true. So, we'll see. Yeah. Market sell-offs suck. Everybody knows that. It's just kind of just poopy-doopy. Everybody feels like trash. Everybody feels, is what it is. Oh, that's right. They stopped the 24-hour trading. Well, I mean, that's just it's probably, frankly, because you have just such substantial illiquidity in the after hours market. Honestly, probably not a bad idea. Just because if you have literally no buyers in the 24-hour market, and then, you know, like a mom comes in, is like, I'm going to sell in the 24-hour market. And it's like, okay, well, the only way we could fill your Tesla sale is if you're willing to take minus 20%. You know, and then the next morning, she's going to be like, what? It's only down 7%. Why did you fill me at negative 20%? Because there was, the order book was really thin and there were no buyers in the aftermarket. What? I'm suing. So, you know, remember, like, I don't think people realize how horrible liquidity is in the post-market. Don't do it. Don't trade in the post-market. It's just bad. No. So, I'd be very, very cautious about that. Somebody says SoFi is such what? Somebody's bagging on SoFi in the chat. Does SoFi use Apex, or who do they use? SoFi for their stocks. Who's the SoFi clearing house? I don't know. I mean, it should be just a disclaimer somewhere here. Apex Clearing. Yeah. Well, that's expensive. They're not going to make any money off doing that. Apex, they make stock trading very convenient for these fintechs. It's pretty easy to start up a broker-dealer using someone like Apex, but it's god-awful expensive. Anyway. It's annoying. It's like, I don't know, I also got like this little minor lingering cough from being sick last week. I hate being sick. It just keeps me stuck in a place. So anyway, all right, let's see what other news there is, because, Bloomberg Intelligence. These guys are usually pretty smart. Let's see what he has to say. I'll tell you if I agree or disagree with what I just said.
We're going to hold. I expect it to be one of our biggest holdings. But he was just, it seemed like he was letting on like we're not done with this. He had talked about capital gains taxes maybe going up, and that might be a reason to harvest a little bit. He had also talked about being worried about businesses with some reliance on China.
Is this him telling you that he's calling the top in a lot of ways, or is this a matter of him saying it's better to hold cash now? Let's keep our powder dry. There will be large whale opportunities moving forward. We haven't seen Berkshire make a significant acquisition in a while.
So I would say it took the interest rates going up took a lot of the pressure off them holding cash. So I think they're a little more comfortable doing that than they've been in the past. Buffett's not really known to be trying to play the market to try to sell at the top of the bottom. He talks about buying these stocks as buying businesses. Yeah. I do think it probably shows a little bit of less confidence in his idea of the long-term prospects of Apple, though.
I mean, I did want to ask, what's he going to use this on? I mean, he's collecting, of course, the proceeds here. He's still in Apple, but he's cut his stake by nearly half. What's he going to do with all the money?
It's really tough to say, right?
Yeah.
I mean, if I knew that, I wouldn't be taking the Metro North to work, right?
At least you're not in New Jersey Transit.
Exactly.
It could be worse.
Could be worse. So he bought some Chubb stock in the, I believe it was in the second quarter, and that's one of their bigger positions now. You know, that's an interesting story, you know, two insurance giants perhaps getting together. There's no real evidence of them buying more of it. But, you know, I think it might be in something.
Oh, congratulations, Mike and Ike. Nice. Sold my December SQQs, $10 and $12 calls for a 300% gain. Good job holding it. Let's freaking go, baby. Let's go. Oh, yeah. You know, Train America sucks. Train America doesn't suck. It's just, you're just in a period of overvaluation. Like this, you know, I've been concerned about it for quite a while. I really started going, what's happening around July 11th? Now, what's really remarkable, and you can fact check this, because if you look on my YouTube channel, I'm pretty sure I made a video on July 12th, or it was later in the day on July 11th, and I'm like, what the hell just happened? If we get a sell-off, we are going to go into a recession. Like, this could get really bad. And we didn't really realize what was happening yet. And we were talking about this in the course member live streams, like, what's going on? Like, these are some abrupt sell-offs. Okay, like, we need to start positioning. let's, you know, increase cash. Let's go puts, whatever. We're basically turning into bears together, you know, a cluster of bears. What's remarkable is, remember that date, July 11th. That's when I turned bearish. That's when I started bitching and complaining on YouTube. And people were like, oh my gosh, why, Kevin? Why are you turning bearish? You're so dumb. You know, Tom Lee's always right. I'm like, okay, look, I don't know yet what's going on, but I'm going to figure it out, and it ain't good. And what's crazy is, if you look at this post by Zero Hedge, you know, now we have a little bit more clarity on what's going on. That's usually how it works, right? Hindsight is 20/20. But look at this post by Zero Hedge, and this date is absolutely insane. You ready for this? Post by Zero Hedge. Zero Hedge posted this morning, 5 a.m. August. You know, I saw this morning when I was up making my coffee. Japan's topics hit an all-time high on July 11th. It's down 25% since then. Japan. Yep, July 11th. That was the day. Go look at my YouTube channel and you will see, like, it's like Kevin's bullish before that, and all of a sudden it was like July 11th. I'm like, oh, shiitake mushrooms. It's something's happening here. Anyway, so we'll see. Let me see if I could show that. July, how many days ago is that? July 11th. I don't know how many days ago that is. I think that was here, and that was 3 weeks ago. Oh yeah, there it is. July 11th. Holy smokes. The market was literally at peak in the United States. And look at it right here. The stock market crash. And you see right here, July 11th. So I talked about that day. And I think if you go to the channel, from then on, things started looking a little bearish. The stock market crashed on July 11th, and you can go look yourself from there. But anyway, very interesting. All right, so let's go back and take a look at the market. Now we know. But again, my thesis continues to be bounce. I don't know how long we're going to have bounces. I've closed all my short positions already. I actually have a call right now that's up like 40%. So I'm kind of just like watching the call print right now because I told you, I literally wrote it down. I said, rally off open. I mean, I don't know how sustainable it is, but I do think there will be a selling wave at some point, and people will go back to trying to take profits. I don't know when that's going to be. Is it going to be right now? Or is it, you know, at the end of the day? Is it, who knows? But people will start selling and reducing sizing in their portfolio. So there will be some fear and panic. There's no doubt about that. I don't necessarily think that after a day like today, you can have a lot more like diving off the cliff, unless you have like some really serious breakout of geopolitical tensions, which you might. Because we are expecting Israel to be attacked tonight. We were told by Monday night. Well, you know, Monday morning's over in Israel. What's the time in Israel now? It's probably like early afternoon now. Time in Israel. Oh, it's after. Okay, it's 4:52. So what's sunset in Israel? Is 3 hours. It's sunset in 3 hours. So be on alert for the next 3 to 12 hours. No, 3 to 15 hours. That's what I would write down. Next 3 to 15 hours. If you still have quiet in Israel, that's be happy. It's a good thing. You don't want the loss of life and you know, war and crisis. You don't want all that stuff. So okay. What else is going on here? Micron. Let's see here. VIX back down to 46. I'll be very curious to see where it closes today, if it closes below 40. And it does look like a lot of things have really started to try to recover. And yeah, getting rejected for a second time now at 52.4 on BTC. Even Nvidia is recovering. Look at that. Trying to get back to that 101 position. JP Morgan down 3.2. Wow. Wow, wild. Tesla keeps trending out. You know, you got volatility on the day here. There's no doubt about that. But the trend's pretty clear on Tesla right now. Oh, boy. Jeez. Okay, let's see what else is being said. So let's hop in here for a moment, see the doomers.
BIS, don't hold me to it, but they did say the carry trade was like expanding to broader things. And Matt, you were joking about NVIDIA, that, you know, you can invest where yields are higher in, say, the U.S., and you could buy stocks. You don't have to be in fixed income.
I mean,
so
this is an old explanation. We already know this. I don't need to listen to the carry trade explanation again. Come on. Talk about something different, would you? Let's listen in.
Close to Biden, except for Gina Raimondo. So this is a nice change of pace. There's a lot of business people surrounding Harris. If you're in the stock market, if you care about your paycheck, you go with Trump. If that's what you do.
You do?
Yeah. Well, he wants to cut your taxes.
Oh, he wants to cut taxes.
Your taxes.
My taxes got raised enormously, as you know, under the last Trump administration.
I don't know if he wants to cut your president.
No. I'm in a blue state.
Oh, yeah, no, forget you're out.
They want to kill us.
I tried to reorganize. I tried to go to.
They want to put us out of business.
Pennsylvania.
That's
it's not
what
as
they
easy
want
as
to
I
do to
thought.
us.
I can become an
They already
Italian
did.
citizen.
This banter is just ridiculous and not highly useful. Somebody donated $10. NMCT. U.S. base in Germany is on 24-hour mobilization notice, and so is the airborne unit in Italy. Normal for airborne units, but it's not for German stationary units. Normal in Italy. For the orbit. Wow, really? Stationary units on mobilization. Yeah, I think people underestimate how badly Iran was embarrassed here. You have to consider this. Iran literally had a military installation that they told everyone was safe. Bulletproof glass, radar, anti-missile defenses, full of Iranian Revolutionary Guards. That building had the bomb has been planted inside. And nobody figured it out, to stop it, obviously. And it killed a very important figurehead at the top of Hamas. So it is a massive embarrassment to Iran. Iran will retaliate. The question is, what kind of dose are they going to give Israel? Because, if you get another, okay, we're going to send 150 cheap-ass drones over, then who cares? They're going to get shot down and it's done. The concern is that they are going to try to obliterate Israel. And they're not going to it's not going to be the first day that Israel gets obliterated. The way they're going to do it is they're going to try to fight a war of attrition against Israel. So essentially, you send rockets. More. Eventually, Israel starts running out of ammo, defensive ammo. And eventually, Israel says, all right, everybody go in bomb shelters. We need to start protecting infrastructure and military bases. And then houses start getting bombed. And then Hezbollah starts marching in and fighting a ground war. This is what you do not want to happen. And this is where, frankly, the United States shows up not only in an aerial form, but, watch, if it escalates, you'll end up getting U.S. boots on the ground to build some form of internal buffer zone in Israel. And, then America gets attacked. Okay, great. Now you've got NATO that's hit. It turns into a cluster F really fast. You realize, I don't think a lot of people do, you realize Israel has nukes, right? Like, Israel's got 200 to 400 nuclear weapons. Tactical nukes they can slap onto a ballistic missile and drop on Iran. You are a button push away from nuclear warfare. And if anybody's going to launch it, it's not Putin. It's Bibi. He will not have in my opinion, no hold back from pushing that red button and blowing the crap out of Tehran. So, might be why you're starting to see some embassies give evacuation notices for, the capital of Iran. It's crazy. I mean, it's just speculation on nuclear warfare. You don't want to go there, right? I'm saying, these are how things could escalate. You don't want that to happen. But, that's all on the itinerary for this week, mind you. So figuring out how bad it's going to be, that's on the itinerary this week. Okay? It's crap. Okay, we're 1 minute away from getting ISM data, mind you. Oh, let's go, Tesla! Woo! Pump it up, baby! Okay. So this morning we got U.S. services PMI came in a tiny bit weaker. Nobody cares. What we care about right now is the ISM services index. We're looking for 51, and on prices paid, we're looking for 55.1. Then we're looking for employment, expecting that to contract to 46.4, and we're looking for new orders at 49.8. We're about to get it here. Kevin, Putin is not afraid to use nukes if he gets pushed. He ain't getting pushed, bro. This is just a proxy war to bleed him. You know, there's still like some mutual respect there. There is no mutual respect between Iran and Israel. That's my point, is there's so much less respect between those two. All right, here we go. Services index beats 51.4. All of it comes in high. All of it comes in hot. Well, there goes your chance of a rate cut. But that's also not recessionary, mind you. 52.4 on new orders, 51.1 on employment, 57 on prices paid. That's higher. Everything comes in higher there. That is not a recessionary read. And those are the July reads, mind you. So that's not necessarily a sign that you are going to, see that continue, but it is something that some will want to pay attention to. Okay, yeah, that's crazy. Oh, I got a text. You're about to go in the money. I know. I bought an out of the money call, and yeah. I wrote it down. I'm like, look, I think it's gonna rally off the open, so I bought a call. Like, I'm just doing what I said. It doesn't mean I'm not gonna flip here at some point, because I do think there'll be some selling pressure soon. But you know, I'm just gonna take my. Oh, I'm in the money. I'm gonna take my tendies, baby. Somebody said, Phil Straza, not financial advice, but if you had a lot of margin right now, would you sell or let it ride? Oh my gosh. Well, geez, yeah. Hi, Phil, first of all. What I would probably do, this is me personally, you know, I can't give personalized advice, obviously, here, but, I would probably slowly try to wean that on bounces, right? So let's say you have a bounce in markets going and you rally into the close today. Okay, so rally into the close today, sell a bit, start paying off the margin. I understand that might mean some of it's being sold at a loss. I don't care. Get rid of the margin, man. You don't want to get wiped out. So I'd sell a bit. And then, you know, if we don't go to war tonight and there's another bounce tomorrow, sell a bit more. You know, I'm probably in like 25% increments. So like if I had 100K in margin, I'd be like, cover 25, cover 25, cover 25, cover 25. I got rid of margin a long time ago. I think it is very, very bad. House hack, for example, a real estate startup, zero debt. Not a single dollar hala of debt. Hello, let's listen to Rick. He's always kind of fun.
Is better than anticipated, and unlike much of the service sector data we've seen, this is more on the positive side. It could have a bit of a lasting effect. Just consider this. Right now, we're at 377 on a 10-year. That's very close to unchanged. At its worst level, it was down 13. Twos at their worst level were down 24 basis points. Right now, they're getting very, very close to unchanged. They're only about down 3 basis points. This is a huge turnaround in interest rates to the upside. David, back to you.
All right, Rick, very important to note, of course. Good Monday morning, everybody. Welcome to another hour of Squawk on the Street. I'm David Faber with Melissa Lee.
Love the new music. CNBC, good job. We are about 7 or 8 basis points inverted now.
This hour with the latest, of course, from the Olympics. Let's talk markets. You just heard Rick discuss that move back up in yields. Remember, we were in the 3.6-ish range on the 10-year. Now we're 3.77. And that, along with perhaps some other things, has had a positive impact on what was a significant sell-off. Continues to be, but well well off the lows of the morning, with the S&P now down some 2.5% and the NASDAQ a 3.2%. Melissa.
We are 30 minutes to the trading session. Here are the three big movers we're watching for you today. Some of the top names in tech leading the market lower as last week's sell-off continues. Shares of Apple sliding further after Berkshire Hathaway cut its stake in the company by roughly half. Nvidia shares also down double digits, leading chips lower. A report from The Information that its upcoming AI chips will be delayed by 3 months or more, tied to design flaws. And take a look at shares of Tesla. They're down to just about 5% as investors are increasingly worried about global growth. Elon Musk saying over the weekend he believes the company will generate sales of more than $100 billion. That would be ahead of street expectations. We'll have much more on these names as well as a broader sell-off throughout this hour.
All right, a key part of this morning's sell-off, well, it has to do with weakness overseas. Japan's Nikkei suffered its worst day since 1987's Black Monday. A lot of that having to do with what we call the yen carry trade. We've talked in the last couple of weeks about the significant move up in the yen as a result of a move up in interest rates. And perhaps we underestimated just how much money was at stake here. Dom Chu, you've been tracking all this action. Let me let you take it from there.
Yes, sir, David. So the overnight hours in Asia saw the first chance for the world to really react, right? The first time zones to react to the Friday jobs, really the sell-off. So that epicenter...
Somebody here is writing, Vanguard, Fidelity, Schwab, Robinhood should be federal regulation that exchanges provide robust, scalable services. I mean, there is a lot of that. That sort of compliance exists with FINRA. It's very, very bad when services like that go down. They're not supposed to. So, no. It's like, trust me, the regulators hate that crap, and they do not want to see this happening. So outages, somebody's going to be paying big old dollar fines. You can bet on that. That's almost certain. So I wonder how is Apple doing today right now. Apple still down about 4.6. You had a nice little bounce there. Let's see here. Let's go with that. Let's do that. Okay. Okay. Oh, that's cool. All right, great. Okay. Yeah, cool. That's that. Let's see here. Okay, cool. All right, so let's see here. Okay, let's see what we have here. I want to see what else the suits are saying here. Stocks pair losses, yields take higher on ISM beat. Okay, you realize? Okay, all right. Let me just say something here. Y'all realize the ISM beat is really bad. Like, that is bad. You literally have people running around like SpongeBob. We need an emergency rate cut! And the Fed, well, you know what the Fed is doing. They're saying the following.
Data dependent.
Well, what did the data just say? Everything's fine. The economy's not in recession. It's all good. Yeah, don't let the market skew you. And, so, like, literally, the ISM numbers come out. I'm like, all right, well, that might signal no recession, but you know what it does signal, right? No cut. And it certainly takes an emergency cut off the table, so it just causes problems. It's a disaster. So, yeah, it's pretty wild. Pretty wild. So, anyway, what else? Okay, so that's that. Let me see what else is being said out there. Let's see. I want to see if Nick T said anything. You've heard my opinion, though. I don't think you get an emergency cut. So ISM services surge in July. Yeah, that's bad for you know, your attempt to try to get cuts. We already know that. Donald Trump is yapping about Kamala. Of course there is a massive market downturn. Kamala is even worse than Crooked Joe. Bro, she ain't the president right now. Trump's funny. I miss the tweets, honestly, just because it's like some of them were just so ludicrous. Yeah. All right, so what else? What else? Oh, they're replaying some parts from Goolsby. Let's listen in here for a moment.
We're forward-looking about it. And so if the conditions collectively start coming in that on the through line, there's deterioration on any of those parts, we're going to fix it.
Didn't say there would be one, didn't say there wouldn't be one. Markets are trading with something like a 1 in 3 chance plus or minus of an intermeeting cut, but they've priced in definitively a very aggressive path for the Federal Reserve in the months ahead. Take a look, 150 basis points are now priced in through January, a 50 in September, priced in, 50 in November, priced in, and then 2 more 25s in December and January. It actually goes further than that, but you have to cut it off someplace. Total of 150 basis points over the next 4 meetings. Goolsby didn't comment directly on those numbers, but he did say markets could have made up its mind faster about a recession and what the Fed's going to do than the Fed itself has. He noted that the jobs report, it can be revised substantially, and that payroll growth did not yet look to him recessionary.
If you look at how the market reacts in its predictions of the Fed funds rate, there's a massively more volatility in the market reaction on a day-to-day basis than in what the actual moves are.
Worth remembering, earlier last week, most forecasters were looking for 2% growth this quarter and this year. The jobs report was weak, and there could be further weakness ahead. But up until the jobs report, other data pointed to trend growth, not a recession. And Melissa, that ISM, it's not the strongest ISM services we've seen, but it's not below 50, and it seemed to be quite a bit stronger. It did not look recessionary to me.
Steve, yeah, well, but it had an impact, as you point out, as well on yields, which seemed to have sort of given us a little bit of a pause in the selling, well off our lows in the equity markets. Steve, there's talk about an emergency meeting and rate cut. I'm just curious to get your opinion. First of all, I'm sure I don't know how you feel about the possibility of it, though I could guess. But if it were to happen, just to say, would that be seen positively or negatively by the market?
In the absence of any further data, it would be seen negatively. And I think that's an important qualification, David, because, look, the market sees pretty much what the Fed sees. They don't come to the same conclusion, but they see pretty much the same data. I do not see the data that would justify for me the Federal Reserve meeting on an inter-meeting basis.
Yeah, they're not going to. I agree. I don't think it's unreasonable to assume we're pricing in Kamala. You base that Bitcoin trade on that potential. Yes. That is true. That is true. I guess my joke was that I don't think that today's specific sell-off is solely because of Kamala. But you're right. Like, the trend could have been down since July 11th because of pricing in Kamala. That is true. That's absolutely true. Somebody says the run is over. Somebody, Martin here says, yo, that Tesla trade was spot on. Yeah, I know. I closed that sucker pretty close to the top. That knock on wood. I need some more of that. Somebody says, are you liking IBKR? Yeah, IBKR is good. I'm kind of split right now. I've got well, it was really last week that I usually don't use Robinhood, Webull, and IBKR, but I did. It was hilarious because IWM crashed the way it did. IWM. So a couple things I wanna sort of just make very clear. Number one, I think there's almost a negative chance of the Fed emergency cutting. And this ISM report reiterates that. So let's write that down for a moment. Let's write down some takeaway thoughts, okay? So, okay, we're gonna write down some takeaway thoughts. Fed ISM data beat across the board with no category in contraction. Jobs, prices, services, etc. This IMO kills the ability for the Fed to even consider an emergency cut. I don't believe they will. They substantially fear reigniting inflation. They don't care about a recession. Unfortunately, I really hate saying that. Unfortunately, they don't care about anything but that. And because all the other stuff can be solved. You know, you could print your way out of a recession once you're convinced inflation's gone. That's fine. So then another takeaway thought is I do think over the next few days, so I would say absent substantial Iranian-Israeli escalations, a bounce over the next few days is reasonable to expect. However, I do think, I think the trend until at least the election will be down. So 3 months. And if recession, even longer, right? Into 2025. Okay. I think that Affirm is a literal bankruptcy play. IMO, Affirm is a bankruptcy play. See below. That's all. I write this stuff down at ehack.com. You might not be familiar with it. I don't really pitch it. I don't care if you use it or not. It's literally just a place I like write notes down because it makes it easier for me to collect my thoughts and try to just be consistent with what I'm feeling and what I think is going on in the market, and then I could reference back to it. So, you know, I don't need more emails going, oh, it loads too slowly, or oh, Kevin, you can make this better. Like I don't care. It's like a note. It's like my notepad that I just put on the internet, ehack.com. Like there's not even a single ad on it. But you're welcome to use it if you want. What I always tell people is just look at, like, if you really want to, just look at ehack.com when you go on the pooper. And hopefully every time you do, there's a little update for you to read. So anyway, okay, so Affirm's a bankruptcy risk, and I would be very, very nervous about layoffs coming. So be cautious. I've been saying this for about 3 weeks now. Be cautious of layoffs. It's not just, and I really want people to consider this. It's not just losing your job. It is getting paid less. Because you could lose your job, get another job, and get paid less. Or frankly, you could get a phone call from your boss that's like, hey, we can't afford what we've been paying you. Take a pay cut or leave. No, I don't advocate for that. I'm not saying that should happen. I'm just saying it could happen. And so I think it's really important for people individually to think, okay, what do I need? Like, I would rather prepare for a recession now than not be prepared and get rugged. Like, I don't want to wake up in a recession and be knee deep in debt and margin loans, and you know, not be able to pay my bills and then lose whatever you've built. So, you know, fixed rate debt, non-callable debt. Like, I mean, for example, I bought this plane, right? Yeah, the little one floating right here. It was like, I don't know, that was a gift. Anyway, so I bought a plane, and I have a loan on it. But I remember when I was shopping for the loan, I was comparing a loan broker and JP Morgan. And the loan broker's like, Kevin, I got you 20-year fixed. And I'm like, oh, that's actually pretty good, 20-year fixed. And then JP Morgan's like, we could get you 7-year variable. And I'm like, nah. And they're like, okay. We can get you a 10-year fixed. And then I go, any call provisions? And JP Morgan says, yes, Our loan has a call provision. So if the value of the plane declines, you could get basically a margin call on the plane. And I'm like, fuck that. And so then I asked the other company, I'm like, yo, any call provisions on this loan? Nope. Fully amortized 20-year loan. I don't care if it's more expensive. I'm like, that's what I will do. I will not be exposed to margin calls. I know how irrational markets are, so stay away from that stuff. You know, these are just principles. Keep this in mind. And I've said for decades, too, always 30-year fixed-rate mortgage. You know how many nuts have a 15-year fixed-rate mortgage, and then they lose their job, and then they're like, why the hell do I have a 15-year when I could have had a 30-year and I could have been paying, you know, $1,500 or whatever less per month. 15 years is stupid. What, to save a little bit of an interest rate? You know, back then, like 0.5%, who cares? You could pay your home off in 15 years if you want, just make an extra payment. But don't force yourself to that. Always 30-year fixed rate debt. My God, if they had 40-year loans, I'd be taking the 40-year loans. And then that's usually where like the TikTok finance kids are like, but Kevin, then you pay more interest over the loan. I don't even want to start the conversation because now you don't consider the cost of capital. You don't consider opportunity cost. It's just like, it's so basic. It's just not even worth responding to. Anyway. So, you're lucky you don't have to renew every 3 or 4 years. Well, commodity Steve. That's because you're in Canada. But the good news is those loonies and toonies are okay, I'm not going to go there. I love you, Steve. No, you're right. I know. It is a blessing in the United States. It really is. People take it for granted. But you're right. Nowhere else in the world is there a 30-year fixed rate loan that I'm aware of. And that's because of the government. You know, the government backstops 30-year mortgages, conventional loans. And the private market has to try to compete with those as well. So that's why sometimes on jumbos, you get the 30 years as well. You know, the non-conventional loans. Yeah, you're right. You know, Germany, 5-10-year loans, and you got to refinance over and over and over again. It sucks. Somebody, they're called pesos now. That's funny. Benjamin Sellers. Bro. Hey, Kevin, new member here. Just subscribed. You seem very knowledgeable. Thank you for sharing your thoughts with us. Do you think Bitcoin could go down to 42K during the current correction? Hold on. Benjamin Sellers. Did you ever live in Thousand Oaks like 10 years ago? No, like 13 years ago? Anyway. So, anyway. As far as do I think Bitcoin can go, listen, if we go into a recession, Bitcoin's going to go to trash. Close to it. Holy Newbury Park then, or something like that. Dude, didn't you sell a house in 2011? It was 2011 or 2012. I went to a listing appointment at your house, and you didn't hire me. You're in Camarillo now? I don't know. I think it's you. Oh, what a small world that would be. Anyway, so, I was like brand new too. I think it was my first or second listing appointment ever. And I'm like, the comps? Yeah, sure. Yeah, I'll show you the comps. Huh. Oh my gosh. I'd never forget it. Benjamin Sellers. Dude, you live rent-free in my head, man. So anyway, okay, so where were we? Oh yeah, Bitcoin. And look, if there is a substantial recession, Bitcoin's not safe. You know, Bitcoin's one of the first things that gets sold because people need the liquidity. You know, I was actually even looking at this. I was like, oh, you know, well, like maybe staples could be safe, like, you know, McDonald's or whatever else. Really, I was looking back to 08 and 01, and I was finding that there really is nothing that's safe, you know? So it's kind of wild. And it's unfortunate. But I was looking at Bitcoin this weekend, and It was wild. It's wild you mentioned 42 as well, because I'm pretty sure, yes, you have a line at 42 too. Now, I understand I have a lot of lines here, but it was wild because this weekend I was watching it, and I remember it was over here, and I'm like, oh, wow, it's at 61. And this was on Saturday. And I'm like, oh, it's riding the 61 line. Okay, well, next stop is, 60. And then it's riding that line. And I'm like, nah, I mean, there's no way it's going to go to 57. Because I was going to tweet it. I'm like, oh, wow, it was riding that line. Now it's riding this line. Next breakdown is the 57 line. And people who've watched my channel for a while, they know these lines have been here forever. So it's not like I add these after the fact. And I'm like, oh my God, it happened. And I'm like, okay, but there's no way it's going to go to 52. I mean, it's just like it's been literally gapping down the lines. It's crazy. And I think that's because you have buy orders at the fib retracements or whatever else, right? That's pretty typical. So, there we go. Sorry, I had a little email I had to deal with there. Oh, I got back to that within 0 minutes. Oh, that's not bad. Well, then again, I've been waiting for that email too. It's part of my job. Somebody says it's just harsh sitting at 70% cash. You live around the Ventura area? I do. Anyway, I feel like this is like Craigslist or something. Missed connections. And jeez, Lord. Anyway, okay, somebody's asking like when rebuy. I don't know. It's very, very, very difficult, obviously, to time the market. Personally, I have a pretty substantial concern that even as we remember, even since July 11th. And I want you to think about this, okay? Let me show you this, because you have to be prepared for this. Okay, watch. So you go to NVIDIA, and you go to the 1 hour. No, actually, you know what? Let's go to the day chart. So go to the day chart on NVIDIA, and zoom out. Let's clean up some of this crap here. There we go. Let's just hide everything for a moment. So July 11th was right here-ish. So July 11th, NVIDIA's down 5%. The next day, it's up 1.4%. And then you have these nominal days. You actually had a gap down at 6%, but then you have a 2% positive day. Then you have a 4.7% positive day. Then it's down 6.8. Then you're bobbing around a little bit, down 7%. Then you're up 12%. 12.8% day. So, like, this volatility is insane. And I suspect that will continue, frankly, through the election. Unfortunately, I think the trend is down. So I'm very skeptical of holding, calls longer term. My bias is definitely short. I did play a trade this morning on Tesla because, like I wrote down, I thought it was going to bounce, and it did, and so I picked up. I think that option was up like 50% when I closed it. It was up as much as 60%, but I didn't paper hand soon enough. I only got 50%. Woe is me. Anyway, somebody says AMD rally is crazy. Let's see here. AMD. Oh wow, yeah, from 123 you came up about $10. Nice. New York Community Bank is up. Well, people are betting on rate cuts. So as people bet on rate cuts, these banks actually move up. But okay, another thing to keep in mind is debt. These companies, the banks have substantial exposure to consumer debt. I'm actually not worried about bank failure. I'm more worried about consumer debt collapses and their balance sheets getting written down from consumer loans, which will lead to negative earnings. As opposed to, I'm not so worried about the treasury market leading banks to collapse anymore because yields are falling. Pivotal Investments, $5. Been a course member since 2021, but BTC is filling these gaps because it never retraced to test them. It went straight up from January. This is normal. whatever. You know me, okay? Look, I'm just gonna be transparent. I love you, cryptoers, but I'm short. Okay, what else? So let's see here. Somebody says load up at 52 on BTC. Okay. Let's see here. I wrote an email last week. Just wanted to thank you. Made it all back today. Oh, that's cool. Good for you. Kevin, would you sell September SQQs now or wait to hedge more? I haven't figured that out yet. Was it for a big house in Camarillo? It was a big house. Yeah, and you called me when I was at an airport too. I remember you're like, "Oh, can you meet right away?" And I'm like, "I'll fly in to meet you." I was already on my way back, but I'm like, I just gotta land. And I went with my father-in-law because it was like my first listing appointment ever, and my father-in-law was just retiring. Yeah, it was kind of crazy. So anyway, yeah, Bitcoin 52 right now. It is. That's true. 52.8. So let's see here. I want to see. I bet you I have your email. This is so freaking weird. Hold on a sec. Let me see. Benjamin Sellers. Oh, you had an AOL email back then. You've changed your email. You've upgraded to Gmail. Dude, that's crazy. So, was it? Was it this? I think it was. Anyway, I don't know. I don't know if that was it because I can't find where my listing appointment email was. It doesn't matter. No, that might not have been you because that was for income property. That wasn't the listing. I can't believe I'm going through like decades of email here. But whatever. Benjamin Sellers. No, I don't have my email. Whatever. Anyway, so, all right, I gotta go. Thank you so much, everybody, for being here. I gotta press the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yeah, we're going to end under 40 on the VIX today. All right, folks, we'll see you soon. I'm going to go straight to the course member live stream in like 3 minutes. I'm going to make a cup of coffee and go live. I'll post the link now.